In this video, you will get to understand the relationship between car dealerships and money laundering in Kenya. Welcome back to Nairobi Legal Insights and stay tuned. The car dealership industry in Kenya has both sellers and brokers. For example, we have people who own car yards and they sell their cars directly to potential clients. Then we have the brokers who pose as middlemen, connecting potential clients to the owners of car yards, and in the process they make what we call a commission for facilitating a successful transaction between the parties, and this commission could be 2% or 3%. So those are the brokers. The other key thing you need to appreciate is that the vehicle dealership industry goes beyond cars. It is a big industry because it involves trucks, motorcycles, new aircraft, helicopters, boats, among others. And then, of course, in the Kenyan context, we have individuals who are specialized in selling used cars. Then there are others who actually only sell new cars and a mixture of both. One of the key things you need to note is that this car dealership industry is a cash-intensive business. And a cash-intensive business simply means that normally a client would pay using physical cash. So what is the relationship between these car dealerships and money laundering? Now, on the side of money laundering, most criminals who are involved in drug trafficking or corrupt public officials will usually have the proceeds of crime in cash. And so these car dealerships present an avenue for cleaning dirty money because they're cash intensive, meaning that these corrupt individuals who have illicit finances can actually hand them over to the car dealership to help in cleaning it up. So generally, car dealerships can be used to launder the proceeds of crime. And then, of course, this is contrary to what we call the Proceeds of Crime and Anti-Money Laundering Act of Kenya. And this act can be accessed on the internet. So how does this happen? We may have instances where, most of this dirty money that is in cash is handed over to the car dealership, and the car dealership accepts that money, knowingly accepting the money with proper knowledge and intent to actually clean that money. And so once that money is accepted by the car dealership, then the car dealership can facilitate a transaction where, for example, maybe a corrupt public official gets an expensive, flashy car in exchange for this physical cash. The other way is when, again, these car dealerships know that they're involved in a transaction of illicit finances. They take in this cash. They proceed not to report how this transaction happened. Was it in cash or was it through bank? So basically receiving this money and proceeding to transact on behalf of the other party who is trying to clean that money. And what happens in this context is that we may have someone, for example, person A owns a car yard, and person A makes some legitimate money from legitimate customers. Then we have person B who is corrupt with illicit money in cash. Person B hands the money to person A, and person A is able to mix the illegitimate dirty money with the legitimate money so that it appears as if he's running a successful car yard and the source of his wealth is actually from that business. But generally that business in this context is actually being used to wash the dirty money and create a legitimate paper trail. An example here would be, as you can see on your screen, we may have Kamaki. Kamaki could be a car dealer in Nairobi, and what Kamaki does is to mix both the clean money he gets from legitimate clients and the dirty cash he gets from corrupt individuals who are involved in drug trafficking or corruption. And then, of course, he gets this money, he imports cars. He's able to actually even deposit the legitimate money into his own bank account. And of course, he won't be suspected because based on the records, Kamaki runs a successful car yard within Nairobi. So on paper, Kamaki will appear as a legitimate businessman, but in actual sense, Kamaki's car yard would be booming on the basis of money laundering. He's mixing dirty money and clean money so that then in the process is able also to transact and exchange dirty money for high-end cars with corrupt individuals, and even help them in cleaning money so that it ends up into the banking system undetected. This way, the car dealership industry facilitates what we call money laundering, or in short, wash. The other key thing you need to appreciate is that we also have instances where these money launderers or criminals are going to come and purchase extremely expensive cars. And the goal here is to end up, of course, placing large amounts of illicit money into the financial system. Like I said, the headache of people who actually are involved in corruption is that most of the money they get is going to be in physical cash. And they're trying to find a way to ensure that that money enters the banking system. And by now using this route of car dealerships, someone is now facilitating the entry of that money into the banking system undetected, because they're mixing their proceeds from the car dealership with the criminal money to import more cars, to even deposit some money in the bank, and somehow the money actually gets back to those that are trying to clean it up. So in this particular instance, you will see individuals who appear successful, enjoying high-end lifestyles, flashy cars, but the goal, if you look deeper in the source of their income, it is actually a mixture of dirty and clean money through car dealerships that are facilitating the exchange of cars for dirty cash, and also mixing the legitimate and illegitimate money, depositing it in the bank account so that eventually it gets back to the corrupt individuals who could be public officials or drug traffickers. For money laundering to continue undetected within this car dealership industry, there are some tricks that are used. For example, one of them is structuring cash deposits below the reporting threshold. So in Kenya, if you deposit money in a bank and it's 2 million and above, there will be attention drawn to that transaction by the bank. So the bank is interested in knowing who is involved in this transaction, where is money coming from, and what is the purpose. So to avoid really getting the attention of the bank itself and the regulators as far as money laundering is concerned, what happens is that then the deposits are going to be structured in such a way that they're below the threshold. This way, these car yards can continue importing cars, moving money undetected. The other trick they can use is trading in cars and conducting successive transactions. So we may have an instance, for example, where a single car is bought by under a company, then it's sold to a third party, then it is sold to another car dealership. These successive transactions, really, they're intended to produce complex layers of transactions. In money laundering, that is called layering. You're trying to create multiple transactions to ensure that it is difficult to really detect who was the ultimate beneficiary of these proceeds of crime. So these are some of the tricks that can be used to layer out the dirty money. And for you to properly understand what layering is, on the Nairobi Legal Insights YouTube page, click on playlist, and there's a specific playlist on money laundering in Kenya. Then you will have access to multiple videos explaining money laundering in detail. You will be able to appreciate what layering is and also apply it to this specific sector, which is car dealership and money laundering. And then, of course, the other trick used by these individuals is what is referred to as fraudulent invoices. We may have an instance where these invoices are created, and the goal here is to hide the buyer's identities. So how do these car dealerships work in conjunction with these money launderers to ensure that their identities are not revealed? Using the previous example, we can have a car imported under the name of a company. So a company owns that car. The logbook is in the name of a company. Then that car is sold to another company. Then there is another cross transaction to another individual. And then the car again lands in the hands of the ultimate beneficiary. So you see, that fraudulent invoicing, several ownerships switching hands, creates a network where you can't really easily identify the identity of the true buyer of that car. So we may also have instances where these dealerships are buying and selling vehicles between themselves. We have instances where someone actually owns a flashy car, but it's not registered in their name. So they're benefiting from the flashy car, enjoying the lifestyle, but that car is not actually attached to them. The logbook is under a certain company. And when you look at that company that owns a logbook, there were several other successive transactions before the car was fully registered in that particular company. That way you never get to know who is actually cleaning dirty money. These are some of the tricks used to launder money through car yards in Kenya. And the goal of Nairobi Legal Insights is to bring awareness to several stakeholders to understand how money laundering works, and of course bring about policy change and awareness so that this crime is fought. Because the economic effect of money laundering is that it affects those that are actually operating legitimate businesses. For example, in Kenya, we have individuals who work very hard, get loans from the bank, and they run these car yards. On the other side, we have those who have car yards that are actually basically used to clean dirty money. Their sole goal is to mix dirty and clean money, and of course create these transactions in such a way that the dirty money, the dirty cash, is fully cleaned in the process of operating such a car yard. So when you're running a legitimate car yard and your neighbor is running an illegitimate car yard through money laundering, that way your original business is going to suffer, your profits are going to suffer, and how are you going to compete against someone whose goal of being in that business is actually to clean dirty money? So money laundering has a disastrous effect on the economy of a country. It affects those operating legitimate businesses because they're competing against other individuals whose businesses and models are unrealistic. When you're cleaning money, the goal is not to make profit, but to ensure that money actually enters the financial system and criminals benefit from the proceeds of crime. In our next video, we are going to be looking at the church and money laundering. Remember to subscribe to Nairobi Legal Insights to receive notifications every single time a new video is posted. And then, of course, follow our LinkedIn page, our TikTok page, and see you next time.